Hello, this is Michael with Stock Analyst with Longwell Capital. Today is Sunday, 9/14/2025. On Friday, the SPY closed at 657.41. Today, we're looking at Global Payments Incorporated, ticker symbol GPN. You can see here the 200-day moving average is up here currently at 93. The 50-day moving average has built up here up to 84. Recently from a low of 76.60, it's traded up to 90.64. That was 2 or 3 weeks ago. It's been building down and it's approaching this 50-day moving average. And one thing to note, the GPN has earnings coming up on Monday morning before the market opens on November 3rd. So since it's been building down the last few weeks, it could get some support here both at the 50-day moving average at 84, which is also the 50% Fibonacci retracement level. Could build up to, and we're just looking at an exit strategy at 87. So it could build up with a bounce off the 50-day moving average and building up into earnings in the next couple weeks. So currently GPN is over 40% discount below its intrinsic value. Some potential cons for GPN. These are overview cons. The payments industry is highly competitive. GPN has underperformed in the industrial sector. It has moderate volatility and has moderate debt leverage. It's currently trading just above the 50-day moving average at 84 and well below the 200-day moving average of 90. So it has been, these averages have been narrowing over the last couple months. And so the next level of volume price support is actually slightly below the 84 level at 83.3. So it could be that the 50-day moving average doesn't provide support and it builds down to 83.33 or lower. The next earnings, as I said, is Monday before the market opens on November 3rd. Some pros: the share price is about to trade near the 50-day moving average, which could provide support and may potentially move higher. Starting a small initial entry position could provide up to a 3% or more gain, as the share price could trade up higher, approaching earnings on November 3rd. As far as hedge fund traders, although only 7 hedge fund traders have positions over 1.5%, all of the top 20 are currently down in their positions, and most of them have added to their positions. Although several well-known hedge fund traders only have small positions below 0.5%, Ken Griffin, Paul Tudor Jones, and Ray Dalio all significantly increased their positions. So looking at a potential example of dollar cost averaging in, starting with 20%, putting in at 84, which is right at the 50-day moving average. The next entry or add level at 81.05, again at 20%. The next one at 78.9, 76.75, and the last one at 72.6. There are volume areas of resistance up at 87, which is our exit point, or if you're up 3 or 5% on your total position, would be a good time to take partial or full profits. There's another level of resistance up at 88.85. So again, I'm recommending an initial entry here right at the 50-day moving average at 84, which is also the Fibonacci retracement level of 50%. And then dollar cost averaging, if for some reason it continues to drop down to 72. So looking at some of the fundamentals of GPN, it showed pretty consistent and strong cash flow between $1 billion and up to $3 billion per month. Currently, all the fundamental valuation ratios are lower than their median, including the PE ratio down at 14.56. The price per sales ratio is down at 2.19. The price to book ratio is down to 0.92. And the price for free cash flow is down to 6.67, all significantly below their medians. The outstanding shares have decreased over the last 5 years. Thank you very much.